Welcome to Autotown. From the factory floor to the C-suite to the dealership lot, everyone is welcome in Autotown, a place to go for insights and analysis of what's happening in the auto industry. I'm your host, Jamie Butters. Hey, I'm Jamie Butters. It's my honor to welcome you to Autotown. Autotown is your place for insights about the auto industry, representing all of its constituents. From the factory floor to the C-suite to the dealership lot, everyone is welcome in Autotown. Autotown is brought to you in part by Aumovio, a global top-tier auto supplier. Riding shotgun with me this week as my guest co-host is Bill Koenig. He writes the Spy Command blog and co-hosts the 007 Files podcast. Bill is a longtime accomplished auto journalist, most notably at the Indianapolis Star, and here in Metro Detroit at Bloomberg News. He also was a longtime senior editor at SME, formerly known as the Society of Manufacturing Engineers. Bill, welcome to Autotown.
Great to be here. Thanks for having me.
A little later, we're going to stop at the coffee shop for a chat with Rick Wainschel, VP of Analytics at Catalyst IQ, about new record highs for the average marketed price of new vehicles here in the U.S. But first, Bill and I are going to take a quick drive around the block and talk about the latest in the industry. So, Bill, the USMCA trade agreement among the U.S., Mexico, and Canada has officially begun the 10-year process of coming to an end. Though in reality, talks are scheduled to continue, at least with Mexico, late this month. And what I'm hearing from sources is that there are a lot of investments that automakers and suppliers would like to announce in Canada and Mexico, but it's not prudent to do so without a trade deal. I mean, making that kind of an announcement can be politically challenging at any time during a Trump presidency, but especially during these talks. So here's the thing. Unifor, the union that represents Canadian auto workers, among others, is in talks with the Detroit Three right now. It's a tough situation. Their timing has really backfired. I think they wanted to negotiate a year ahead of the UAW, hoping to avoid only getting the scraps of North American investment plans. But now they're getting tied up in USMCA negotiations and the president's desire that Canada just give up making cars and trucks, pretty much. It's a tough spot for them to preserve the union jobs that they've had for decades.
Unifor, formerly the CAW, of course, was once part of the UAW, and then they split off 1985, I believe. And Unifor and the UAW have had sort of a tenuous relationship ever since.
Mm-hmm.
And they used to negotiate in sync. In other words, but starting in 99, the UAW got a 4-year contract while the Canadians had a 3-year contract. So ever since, they've been out of sync except once in a blue moon when the cycles converge. But now, going back to the 2023 UAW, they went for an even longer contract, so they're even more out of sync than they used to be.
Yeah, and they're at a different time of year now where their contract will end in the spring, maybe keeping the option to go longer in a strike than if it starts in the fall and winter would come.
Right, because they used to both expire in mid-October, like October 14th. And so now it's really complicated between the two unions. And I can only imagine if you're a labor relations official at one of the Detroit Three, having to juggle all those facts in your head.
I remember, was it like a little more than 20 years ago in the early 2000s, there were, for the first time in a while, there were more vehicles being made in Ontario than in Michigan.
Right.
And that became kind of a contentious issue. Since then, we've seen some ebbs and flows, but it seems like Canada's really struggled to hold on to their auto jobs.
That's right, because I know that the way the Canadian union would pitch it, it's like, hey, we've got universal health care, so that's a headache you don't have with us. But even with that, I've seen some studies, or I saw them some years ago, that the labor costs were still higher or supposed to be higher in Canada. Also, the Canadian industry is really concentrated, in Ontario, obviously, basically between Windsor and Toronto.
Yeah.
So that's a fairly compact area.
Yeah, and there have been they've lost some capacity. Sometimes it's just idle. I mean, right now there's a couple of plants that are just waiting for clarity, I think, before they can know how to go forward, especially the Stellantis plant. They used to make muscle cars, and it's like, well, what's going to be a good use of that asset in the North American economy that exists beyond this month?
Right. And also during the Biden administration, and this affected both sides of the border, there was the big push to EVs. Trump comes back for his second term, and it's like, EVs, what EVs? And so that also is a complicating factor.
Well, yeah, because you've got the unionized automakers, the Detroit Three, and their strategies, but then Honda was really going to invest big in an EV hub in Canada as well as one in Ohio. They pulled the plug on the Canada one pretty quickly. Took a little longer to decide on Ohio, but they've really shifted back to hybrids and ICE vehicles. But all that has been really challenging on Canada.
Right. And to get an idea of just how important the auto industry is, drive the 401 from Windsor to Toronto, you will see, major facilities for Honda and Toyota. And, of course, they're not unionized. That's another challenge for Unifor.
Yeah.
They have not been able to crack that nut, and they've tried. Remember, shortly after I arrived in Detroit, it was in the early 2000s. I think there was an attempt, and nothing came of it. It's just, I mean, it's tough for the UAW too on the U.S. side with the transplants.
For sure, and they've had really good success, really steady employment at those plants. That makes it hard to convince people they need to start a fight with their employer when they don't otherwise feel mad about it. Well, I want to shift gears. I mean, of course, we should note the current Unifor president is Lana Payne. She's got her work cut out for her. We'll keep an eye on where that goes. But I want to shift gears. Bill, you alerted me to a historic moment in the auto industry, the 20th anniversary of what's widely considered the worst James Bond car ever. What's the story there?
Well, the story is the Ford Mondeo. Ford was redesigning the Mondeo, and they introduced the redesigned version at the 2006 Paris Motor Show, and they had one of the actresses from the movie, and they let everybody know. Well, the thing is, in the movie, it's fairly early. Bond is driving this Mondeo. They don't explain why he's driving Mondeo. I always assume, he goes to Bahamas. I just assumed it was his rental car from the airport, but they don't say.
Her Majesty's Secret Service doesn't maintain a fleet in the Bahamas for when spies are on vacation or on location?
Evidently not. Evidently not. And anecdotally speaking, every time I have talked about it with hardcore Bond fans, they go, it just... because that car that you see in the movie, it's not a production car. It's not street legal. It's a prototype. Because to be able to get it in the movie, they couldn't wait for a production car. So they put in a prototype. Now, I've seen that prototype most recently in March of this year. And, the body is, I think, fiberglass. It's definitely not steel. Mm-hmm. And it's got a little tiny engine, just enough to make it move forward. Yeah. It's not a regular Mondeo engine. And Bond fans hate it. They just view it as a big commercial for Ford Motor. And it is. But I guess they felt it was a little more obvious than normal.
Yeah, and it's kind of unfortunate because at least the previous Mondeo, the first generation, I have my own experience with it. I was when I was in my non-traditional undergraduate career at the University of Kentucky, I was working at the Lexington Herald-Leader newspaper in a variety of jobs, one of which was in promotions, and Ford was really trying to promote this new car, the Contour, which was what they called the Mondeo in the U.S. So they had an event in Lexington, Ohio, at the Mid-Ohio Speedway. Bob Bondurant, the driving teacher, gave us a little mini course. Here's your crash helmet. You're supposed to wear it. You're not supposed to use it. Those kinds of funny things. We got to do some hot laps with him. That was cool. And you could drive it really aggressively. It's on a closed track and all that. So, drifting and sliding around turns. If Bond was doing that stuff, maybe they wouldn't have felt so bad. But if you're in this show car, you're basically pulling in and out of driveways, and
Right.
that doesn't look really cool.
No, not at all. And if you look, I have since gone back and looked at that sequence. You look at the sequence, they obviously must have closed off the road. And there's no traffic, and they shoot it in such a way to make it look as if it's going faster than it really is. I'm sure they use sound effects because I've seen that tiny motor, and there's no way it would go vroom the way it does in the movie. So
he did also drive an Aston Martin DBS V12 in that same movie.
right later, when the big mission is happening, and then it tumbles over a number of times.
Supposedly a record, I guess.
Yeah.
Record 7 rolls.
Right. Yeah, that was back when Ford's final appearance in a Bond movie was Quantum of Solace, the next movie after that. So at that time, Ford had a deal with the Bond people to basically promote, remember this, the Premier Automotive Group, which was their collection of Jaguar, Aston Martin, Land Rover, and Volvo cars.
That's correct.
And
you got them all. Good job.
and supposedly Ford invested something like $35 million originally for that partnership. Ford never confirmed it, but I do know that started in 2002. And you may also remember Nick Shayla, who was president of Ford Motor. And I was talking to him about it, sometime later, and he wouldn't confirm a figure, but he said, we got our money's worth. So whatever it was, Sir Nick felt they had gotten their money's worth.
Yeah, well, the old purchasing executive, he could always claim victory. He signed the Beatles when he was in college. He signed them to play a gig at his school.
I did not know that.
Yeah, strange but true. All right. Well, I guess one more thing, just to put a bow on the Mondeo. The car didn't really do very well commercially. I mean, they kind of felt like they kind of bragged that they spent billions and billions of dollars in development of this world car, but it never achieved the volumes of the Corolla or the Civic or something else, another world car. And even then, you don't want to be spending $5 billion on developing a Civic or an Accord. You want to spend $1 billion or $500 million and still sell 1 million vehicles a year.
which is sort of an example of the struggles that traditional automakers are having with the Chinese, because the Chinese, all these years later, have cracked the nut on speeding up product development time, doing it cheaper, and now the traditionals are kind of, I wouldn't say shaking their boots, but they're very concerned and should be.
Yes, absolutely. Okay, what a time. Okay, next we're going to stop at the coffee shop for a chat with Rick Wainschel, VP of Analytics at Catalyst IQ. Welcome back to Autotown. I'm Jamie Butters. Riding shotgun as my co-host is Bill Koenig. We're sitting down today with Rick Wainschel, VP of Analytics at Catalyst IQ. Rick, thanks for visiting Autotown.
Happy to be here. Good to see you guys.
For those that aren't familiar, Catalyst IQ basically creates a nightly census of every car listed for sale at a dealership in the U.S. This gives it incredibly detailed information on what's available and how it's priced, including marketed discounts like subvented leases, interest rate subsidies, cash on the hood. So if you take the MSRP and you back out the advertised incentives, you get the marketed price. And if you take that across the whole industry, you get the average marketed price. And that figure has been on the rise. Last week, topping its all-time high set during COVID, top breaking 52,000. Today it sits at $52,049. Rick, there's a lot that goes into that. What are some of the trends you're seeing, and why are we finally at higher than price than COVID?
Well, there's a handful of things. So first of all, is not a new phenomenon. While there was a record price that was reached, and to your point, above 52,000 for the first time ever, it's not a sea change to consumers. Prices have been elevated for going on 4 years now. So consumers have become somewhat inured to this, to the levels that where we're at. But to your question, there's a number of different factors that have been contributing to that. So you mentioned the COVID uh, event. It was, coming from that, you had the chip shortage and then the general supply chain issues. That elevated prices very quickly back in 2021 and 2022. Coming from that, you had general inflation that was pushing prices up across the board, not just in automotive, but really across everything. And that fed into the parts costs and other things, shipping costs and everything else. And then you had the tariffs that were initiated in 2025, and that the OEMs started to incorporate some of the costs there into MSRPs, and that has led us to this point where prices are now elevated, and they're elevated even more, but it's only, and I don't want to minimize it because it's still impactful, but hitting 52,000 and coming from 51,500 over the last, several weeks and months, it is momentous. But consumers have become somewhat used to the prices that they're having to pay.
Yeah, it's not as dramatic as that initial pandemic era, surge, but it's been interesting to watch, especially, the tariffs were put in place, and I think there was some jawboning by the president to discourage automakers from raising their prices, and they pretty much held the line and ate a bunch of costs. And now they're starting to take some of that price. They're starting to add some of those costs back in before they send the cars and trucks to the dealerships and onto the consumers.
We did an analysis of this, and you're right. So back in the earlier stages of the tariff implementation or the rhetoric and then leading to the implementation, the OEMs were somewhat reluctant to take price increases that were specifically related to the tariffs. What they did instead was they started to roll more aggressive price increases into their MSRPs. So we did an analysis a month or two ago that the average price that was related to a MSRP price increase from a model year changeover, about $1,200. And in the prior year, that increase was more like an average of $400. Some go up, some go down. So it averaged out to about $400. That $800 gap is reflective of how the OEMs rolled increased pricing, the tariff related pricing, into their MSRPs more aggressively. Those price increases, those model year changeovers were more aggressive, and they were taking those price increases coming from the tariffs and rolling them in more aggressively.
Rick, let me ask this in a more general way. If you've got a lease coming up and you haven't been in the market for 3 or 4 years, what should you expect in this general situation?
As a consumer.
As a consumer, yeah.
Right. I mean, that is really the question that's practical in nature, because most people will buy a car and hold on to it for 3, 4, 5 years or longer. And so people are out of the market. It's not something that they're seeing every day. And so, and what we had looked at with our prior analysis that I just mentioned was looking at specifically model level price increases. And if you go back, 4 or 5 years, when you go back to say around the time of the pandemic or shortly thereafter, where the chip shortages hadn't really wreaked their havoc yet, um, for a consumer, not only are the prices, much higher, but the interest rates are higher, and now you've got the gas prices being higher. So buying a car is more expensive, uh, maintaining a car is more expensive, and operating a car is more expensive. So it, there was the potential for some significant sticker shock. And if you think about just the normal laws of supply and demand, price increase to that extent, and the inventory has gone up, and the pricing has gone up with it, which is counterintuitive, that consumers would have that sticker shock and would act accordingly. One thing that's been very interesting, and while the storyline of we hit 52,000, we hit this record number in terms of pricing. Another aspect of this issue is that consumers have continued to buy, even though there is that sticker shock, even though a price point, a monthly price may have gone from, $400 or $500 a month to $600 or $700 or $800 a month, or even higher.
Yeah, it seems like we've seen a lot of people stay in the market, but maybe move down. There's been some pushback on statistics like the average marketed price or the average transaction price, because we have so many trucks, luxury vehicles in the market that maybe the median is a bit lower, but it's all still in the mix.
So one thing that we look at is we have a metric that's called vehicles moved. It's a very accurate proxy for per sales. Sorry. So we've been looking at the change in vehicles moved versus the inventory position at a segment level and at a make level. And one of the things that has really been standing out, even if you just look quarter over quarter, Q1 2026 to Q2 2026, is that the vehicles that are moving faster are the ones that you would expect in in the fuel price era that we're currently in, as well as the affordability issues with the price points being so high. So the vehicles that are selling faster than the inventory is flowing in are vehicles like segments like midsize SUVs, midsize sedans, small trucks, and coupes. Those are seeing inventory inflows that are lower than the sales picture, so that those inventories are declining.
One of the biggest surprises of the sales so far this year was that the CRV outsold the F-150 and the Silverado in the first half. Now, I don't know if it can keep it up, but I mean, you're talking about the bigger, more expensive vehicles not turning as fast and the more affordable ones doing so. Like there's a case study.
Well, and the vehicles that are in the opposite position that I was just saying in terms of inflows coming in that are faster than outflows. So in other words, inventories are piling up. For vehicles like full-size trucks and full-size SUVs and more expensive and less fuel-efficient vehicles. So the mix is shifting. And one of the things that's factoring into the pricing is when you have an inventory shift like that, and you have vehicles that are available for consumers to sell, our metric, the average marketed price, is going to reflect somewhat of that towards the more expensive vehicles, because they're replacing the less expensive ones that are flowing out faster. Now, the thing is, though, that we looked at the average marketed price, the increases that we're seeing, contribution in terms of segment mix is about 1/4 of the overall increase in average marketed price. So it's there, but it's not the dominant factor in terms of the prices going up. So the number one contributor to that price increase overall, the average marketed price increase, is MSRP increases. That accounts for more than half of the overall increase. The third piece is less aggressive incentives and discounts that are being offered by the OEMs and the dealers. So you've got those three components that are adding up to the overall price increase, the dominant one being MSRP increases. What that says, by the way, is that those are more durable and harder to reverse. Those are become more permanent and become more part of the mix on a long-term basis.
Given these shifts, how does it affect dealers? We talked about consumers a minute ago, but how does it affect dealers, do you think?
Well, dealers, on one hand, you've got this sales picture, the sales environment that's not bad as it could be. Back to your question about what's the reality of this for consumers and those, monthly price points, the price payments considerably, and yet consumers are still buying. So dealers still have an environment in which they can sell vehicles. But what it really means for dealers is that they have to be very careful about how they go about selling vehicles in this environment. Now, dealers often don't have control over the inventory that they get. The manufacturer dictates the vehicles that they're going to have on hand. So, and they have to deal with that. But what it says is that when you have an environment where people are still buying vehicles, some are more in favor, like those small sedans or the smaller SUVs, and some are going to be harder to sell. And one of the things is that a dealer has to be much more careful and controlled and precise about how they price vehicles and how they market vehicles, like which ones they actually emphasize on their website, which ones they put discounts on, which ones they emphasize in terms of their marketing support. And you can do that at a VIN level, and it becomes all that much more important to be precise in how you do that when you have an environment where people are still buying, but they're buying differently. And keeping up with that supply and demand view is now even more important than it even normally is.
Rick, thanks so much. Appreciate your insights on the that new car part of the business. Of course, we also know dealers are really leaning into their finance and insurance business and their service and parts business when the new vehicle sales gets harder. But we know you have tools to try to help them maximize that, and appreciate you sharing what you're seeing and some of the strategies that can go with it.
You're very welcome. Good to be here.
Autotown Radio is every Saturday at 7 a.m. on WJR 760. Thank you all for visiting Autotown today. Thank you to Bill Koenig for joining me in the studio and Rick Wainschel for joining us remotely. The show is produced by Matthew Peach at M1 Studios in Ferndale, Michigan. Original artwork is by Shelley Trombley. Maya Keener is on social media. The theme song is so much fun. It was composed by Jonathan Franco. A very special thank you to our sponsor, Almovio, a top-tier supplier. If your business is interested in becoming a sponsor, please contact Autotown executive producer James Davies. You can be an active citizen of Autotown. Follow the show on LinkedIn to participate in the weekly poll. You can also follow Autotown on YouTube, Facebook, Instagram, whatever is your favorite social network. Audio can be found on Spotify, Apple Podcasts, iHeart, I imagine other places as well. And of course, you can visit Autotown every Saturday morning at 7 a.m. on 760 WJR in Detroit. I'm Jamie Butters.